crypto is all the same thing. So if I use the same global liquidity index, it's basically the chart of Bitcoin. But Bitcoin outperforms in the up cycles because there's a network adoption model, which is why it does so much better than almost all other assets.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. During a period of financial turmoil, various indicators pointed towards the need for intervention. However, what followed in the subsequent year was a significant rise in the S&P by approximately 15%, the Nasdaq by around 8%, and what Raoul referred to as the exponential age stocks, which experienced an impressive increase of about 35% to 40%. Additionally, cryptocurrencies performed exceptionally well, with gains of approximately 1,300%, ultimately ending the year with a remarkable 100% increase. He has also demonstrated that cryptocurrencies are essentially indistinguishable. Utilizing the same global liquidity index, one can effectively track the performance of Bitcoin. However, Bitcoin tends to outperform during upward market cycles due to its network adoption model, which sets it apart from most other assets. And lots of things Raoul Pal discusses, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
So then when you're seeking clarity in this world, and the world is actually the most simple it's ever been, money in, money out, that's it. Then what you want to do is own the assets that rise the most and outperform that, which happens to be crypto and technology. So if we look at the last time we went through this point, which is the turn in the cycle, which is where we are today, that was December 21st, I think it was, 2018, when the Fed paused, which is roughly where we're getting to now. The market already knows this. It can see it coming. We're already having a banking crisis, all the signs of we need to stop. And what happened after that over the next year is the S&P rose about 15%. The Nasdaq rose about 25%. What I call the exponential age stocks, they rose about 35%, 40%, and crypto did, well, at one point 300%, but end of the year up about 100%, which is truly extraordinary. I've also then shown that crypto is all the same thing. So if I use the same global liquidity index, it's basically the chart of Bitcoin. But Bitcoin outperforms in the up cycles because there's a network adoption model, which is why it does so much better than almost all other assets. So that's the everything code, is the fact that it's all down to one simple thing. And I think it's forecastable. And in which case we know the price of assets in advance, which is a little bit freaky. And I know that sounds somewhat arrogant, but it's a hypothesis that I'll test. But I'm pretty sure it's going to be right, unless something changes. And what we'll know is, are we going to see larger scale QE coming in the next 2 years? So what would have to happen for that to be true? Firstly, we've got a banking crisis, so it's already started. Secondly, so the bank balance sheet is rising. Whether you call it QE or not doesn't matter. The balance sheet is rising. That's all that matters. Secondly, we know that this is not resolved yet, so there's a potential for further use of the balance sheet to sort out that part of the banks. But then we've got another problem here, which is commercial real estate. Commercial real estate, nobody's going back to the office. I mean, you don't work in an office anymore. I don't work in an office, and nobody works in an office anymore. So that's 50% of all of this kind of office buildings are empty across all the big cities. So everyone's going to get out of their leases and everyone's going to be stuck on these smaller banks. Now, interesting enough, we saw this before in Europe. This is what happened in Europe in 2012. Between 2008 and 2012, all the real estate was empty and all the banks went bust. And the ECB stood up and said, whatever it takes. That was to both protect the sovereign nations going bust, but also the banking system. And what they did with the banks at that point, they said to them, we will take anything as collateral. You can give us chewing gum wrappers, old cigarette packets, empty cans of Coke, we'll just take and give you and lend against it. We don't care what it is. And that's how the banks stayed solvent. Then we've got the demographics, and then we've got the debt payments to come. All of that looks very much like there is no way that they don't do a lot of QE. But here is the final problem within the everything code is, well, right now, if I'm looking at 2-year rates, they're at 4.15%.
With an unsustainable budget and persistent inflation, analysts from Hashkey Capital are making predictions, predicting a potential Bitcoin price of $100,000 to $200,000 by the end of 2024. The price of Bitcoin has experienced a significant surge in 2024, driven by the introduction of various spot exchange-traded funds, ETFs, and its fundamental role as a store of value. The interest in Bitcoin is expected to continue, especially considering the ongoing support from the United States government. Discussions on policies regarding high spending and interest rates. Prevail has suggested that the future value of Bitcoin remains challenging to predict due to multiple underlying variables in play. Grayscale's research director, Zach Pandel, expects persistent inflation and unsustainable budget deficits to contribute to continued demand for store-of-value assets like Bitcoin. Pandel told Cointelegraph that he sees significant potential for growth, suggesting that Bitcoin could possibly reach $200,000 by the end of the year. Additionally, Jupiter Xen, a partner at Hashkey Capital's liquid fund, has provided different predictions for Bitcoin's future value. The low prediction is $100,000, the medium prediction is $140,000, and the high prediction is $200,000 by the end of 2024. Jane discussed the favorable influence of ETFs on the cryptocurrency market, which has increased the accessibility and attractiveness of crypto investments to a wider audience. This has had a positive impact on the long-term price of Bitcoin. The behavior of this investment has the potential to align more closely with traditional assets like equity and gold. This could result in more stable growth and make it a more attractive option for mainstream investment portfolios. According to Tim Draper, a venture capitalist, BTC is expected to triple in value by 2024. This projection is based on the anticipated inflows into ETFs and the potential impact of the Bitcoin halving event. During an interview at Paris Blockchain Week, Draper shared his optimism about the future of Bitcoin. He reflected on his previous predictions and mentioned the possibility of a rise to $250,000 by the end of the year. Draper pointed out the positive signs he sees in the market, particularly the introduction of spot Bitcoin ETF in the United States. This has sparked renewed interest and capital investment in Bitcoin. The availability of investment products has also made it easier for curious investors who may be hesitant to hold BTC in self-custody. Additionally, Bitcoin can serve as a hedge against devaluing fiat currencies. Draper included, let's back to the Raoul Pal interview.
GDP growth this year is probably going to be, 1% at best, or probably negative. Who knows? Depends how it falls. So that's a huge gap that needs to be funded because you're just going to create a recession because the US economy is 220% of GDP in debt and interest rates are 4% and growth is 1%. So you've got a massive loss in GDP. So they're going to have to cut rates, which backs out against what the banks are saying, which is the banks are saying rates are too damn high. We have to engineer a false yield curve by having a 0.5% deposit rate so we can have a positively sloping yield curve. And basically we need a yield curve that is positively sloping, which means that the Fed need to cut 200-300 basis points pretty fast. But they won't do it until the banks really puke, which is the next phase of this and probably the final phase when we go back. Then, after that all backs out, is the things that really matter to the Fed. Well, inflation's falling and it should continue to fall. The other part of it is unemployment. Unemployment lags by a long way, as do rents. So going out for the next 18 months to 2 years from the bottom of the cycle, which I think happens in the next couple of months, we will see unemployment rising and dragging. And that whole situation is why monetary stimulus continues a long time after a recession, because employment is always lagging. And so, again, that's where I think the use of the balance sheet, then eventually the economy gets traction again and we go into the business cycle, which looks like it peaks sometime in 2025, according to that same thing. Probably end of 25, not quite clear, might be a little bit earlier. And that's so the everything code, what I found is all these pieces of the jigsaw all actually match. It's ludicrous. And what I found, even if I take the log chart of the NASDAQ and map it forward to say, okay, what's the top of that channel like we do in Bitcoin? Well, it comes with exactly the same number that the balance sheet number gave me as well, which is the same number that I got from demographics, I got from interest payments, and I got from everything. It's like, oh my God, like everything's come together. So that's what the everything code is.
One thing to highlight is that Bitcoin is a more significant change than many people realize. Often they perceive it as just another monetary technology that sits on top of our existing monetary systems. However, I have been emphasizing that it represents a shift from the norm. Money has been in operation for over a century and a half, and it becomes evident that it is not merely a story of a decade-long adoption. Instead, it represents a significant shift in the long-term trend of how money functions. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.